Hi guys, today we will practice social distancing. That means you watch my videos and smash like buttons so I can one day make enough to buy masks and toilet paper supplies. Just joking, I will tell you what am I buying in past 30 days, as we all know that this is best time to be alive and investing in dividend stocks. 1. Realty Income. Realty Income has plunged 33% in about a month due to the outbreak of coronavirus. As a result, it is now offering a nearly 5-year high dividend yield of 4.9%. Realty Income pays its dividends on a monthly basis and boasts of an impressive dividend growth record. To be sure, the REIT has grown its dividend for 89 consecutive quarters. As this period includes 2 recessions, the dividend growth streak is certainly admirable. Realty Income has lost 1/3 of its market cap in about a month due to the fierce sell-off of the broad stock market that has been caused by coronavirus. Right now you can buy this share for a price of $46.47 at the moment of making this video. 2. MSFT, Microsoft. Microsoft is under pressure along with the markets globally, but has held better, down less than 15% YTD versus almost 30% drop for the Dow. Shares of Microsoft started 2020 at $158 per share, and note that they had risen more than 50% in 2019 alone. The company absolutely has a rock-solid balance sheet as it operates with $134 billion in cash. Last week, Microsoft announced it would prioritize cloud access for first responders and emergency services. As more and more countries are ordering social distancing orders, Microsoft Cloud business is growing more and more. You can grab this stock for a price of $152.11. 3. PFE-PFIZER. Pfizer Inc. belongs to healthcare sector and drug manufacturers, major industry. The company's market capitalization is $186.06 billion. Pfizer's share price is currently 33% below fair value. They have 10 years of dividend growth. For investors looking for reasonable growth at a great price, my view is that Pfizer is a great stock to buy during the coronavirus market crash. This losing pharma stock of 2019 and so far in 2020 could be a long-term winner for patient investors. 4. Altria. Well, let's just say that this stock have 9.2% dividend yield. For many investors, the idea of investing in a tobacco producer probably hasn't even crossed their minds. One of the selling points for Altria is the addictive nature of nicotine. In this time when people are losing jobs, I am not expecting them to stop smoking. Do you? As liquor sales are growing, I think people will definitely start smoking more. Price of this stock is $37.61 at this moment. 5. 3M. The 3M Company is an American multinational conglomerate corporation operating in the fields of industry, worker safety, healthcare, and consumer goods. While a 13% decline in 3M's stock price in recent months is likely discouraging for current shareholders, it's offering prospective investors a great opportunity to buy into an enduring company at a great price and with a 4.2% dividend yield. If you're looking for a sustainable dividend with a long track record of payouts, it doesn't get much better than this. 3M's dividend history is astounding. The company has paid dividends to investors, with no interruption, for over 100 years. In addition, it has increased its dividend for 61 years straight. This amazing stock is on price of $133.14 at the moment of making this video. Let us know what dividend stocks are you buying during the dip. Subscribe and smash the like button please. See you soon.